It's important to be historical and not be rational. And I say that because I saw the trucks, the local news trucks.
Out front.
Yeah. You know, that's always, I don't know, I shouldn't say always, but maybe 8 out of 10 is a bottom because they get in, they see the trucks there, and they're great. I tweeted one of those pictures because you see those trucks, it says, wow, we're about to have something big happen. It often means that we had something big happen. Remember, if you've been trading between 3 o'clock and 4 o'clock, you'd say there's a new bull market because there was a huge spike in the futures. We all know that this
3 a.m.
Yeah, 3 a.m. We all know sleeping after the Eagles' victory would be a big mistake. You got to really take it in. XIV went bust last night. That's a particular piece of paper that you and I are now discovering.
Yes.
Turns out to be a lot of people were hiding in that and selling volatility.
We're going to talk more about
they
that
thought it was an asset class.
in terms of these ETNs and the prospectuses thereof. Yeah.
But I think it's important to point out the direction is certainly right, given that spike in bonds. The velocity of the direction seems to be exacerbated by these products that people always come up with. Not unlike, David, if you remember in 87, when they came up with portfolio insurance.
Right.
If you remember in August of 2015, Mr. Bullard, by the way, with some very calming comments. But if you remember, you go back, when were we this much oversold? I've got the S&P oscillator in front of me. August of 2015, wow, that was a great time to buy.
It was. Let's talk a bit more about August of 2015.
Well,
because we were
like
down
that.
11, 12%.
Feels like
it
that.
was quantitatively driven, many would say,
Yes.
as is often going to be the case now because the machines dictate so much and the algorithms do. That was on Chinese devaluation. There were a number of other concerns.
That interview that Mr. Bullard did at 2:15 on Friday on XM.
Right.
It's like, wow. Kind of a footnote.
But we were down dramatically over a 2-week period, and now, of course, it's just a little
and we look
blip.
back and we say, why was that? You know, we can say it was because of the Fed.
Right.
We can say it was because of interest rates, or we can say it's
but is that somewhat akin to what we've seen over these last?
I was on there for the flash crash,
yes,
and there were a lot of people were saying it was because of Greece. Now, David, you and I said that there was 8 million people in Greece.
Yeah.
Did that really cause a 1,000-point loss? No, the machines broke down, but we always want to identify a villain. There is no Lex Luthor.
No, but when we look at the technicals here, when we look at the quantitatively driven models, and we wonder how much further there is to go if you can try to ascertain that based at least on the action that took place back in 2015 in August, if it was somewhat similar to what we're seeing here, we're not quite done then, are we?
No, but I think what you do, I like to, this idea of the market really does break down as a concept. Because I could have said that, did Exxon really go up 5 at 3 a.m. and then go down 10 from there at 7? No, I mean, it's a real company. It's the largest oil company in the world, but that's the equivalent of what would happen. So I say pick something that you really like. I mean, let's use a stock like Costco, okay? Costco's made its quarter. You have to believe right now, as of this morning, that the wealth effect's been destroyed. No one's going to go get those free samples in the unbelievable crab legs at Costco this weekend. And I would tell you that's probably wrong.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.